Banks are easy companies to hate. They have a lot of debt, they're cyclical beasts, and at this point in the cycle, they are prone to making, at times, bad loans and taking reasonable losses on impairments and the like. And certainly with the platform of low likely future growth, given the extent of the credit expansion we've seen over the last 20 years, it's not unreasonable as a starting point not to be attracted to investing in the banks, and I can completely understand that. But like all things, price needs to be taken into consideration, and some of the banks trade at very low multiples of earnings relative to the stock market. And as I've mentioned, they have low growth prospects, but it's not to say their growth prospects are negative. And they trade at, in some cases, 10, 11, 12 times next year's earnings, which have been quite disrupted through the Royal Commission, some of the compliance costs that have come with that, remediation costs, and a reasonably stagnant economy, together with the threat of new competition from these neobanks entering the market. And so there is a lot of uncertainty with respect to the banks as well, and so some fear with respect to what the future holds. But there's also a lot that's discounted in the share prices. And it's not to say that the banks are owning the banks as a path to riches, but there are risks ahead, but there are also rewards if the future turns out not to be as woeful as people expect. We have about 12%, and that's off the top of my head, investment in banks, which is most likely below the bank's weight in the index, which is probably closer to 20% or more if you include the regional banks and Macquarie. We don't own CBA and we don't own Westpac. We own ANZ and NAB, and both of them are around 6% of our portfolio. We also have a reasonably large investment in AMP, which does have bank exposure to it because it owns AMP Bank. And we have a small investment in Virgin Money UK, which is the Clydesdale and Yorkshire Bank spin-off from NAB. So all up, probably 15% exposure to deposit-taking institutions. Well, we haven't bought CBA, so we've selected that one out, and that's on the basis of its much higher multiple of earnings, and our assessment that incrementally from here, the same dollar of equity will probably earn a similar return irrespective of the bank that deploys it.